The hour of 10:15 having arrived, I will call the House Tax Committee to order when we have a quorum. We'll get started right away. We have the House File 1301, a Bernardy bill that was to be first. She's requested to go second, so I will, when we have a quorum, I'll move House File 268, a Davis bill regarding medical device payment tax credit provided. If you could, so this is, when we have a quorum, I'll be moving House File 268, but we'll start right now to honor members' time. So please state your name and who you represent for the record, please, sir, and tell the committee why this is probably the finest idea since sliced bread.
Good morning, Mr. Chairman and members of the committee. My name is Shay Mandel. I'm the president and CEO at Life Science Alley. This is the finest piece of legislation since sliced bread because, as I think all of you know, the medical technology industry in Minnesota is really kind of one of our core industries. There isn't a place in the world that is more densely concentrated with medical technology or employment in the medical technology fields than the state of Minnesota. As you also all know, and I appreciate, Mr. Chairman, your willingness to bring forward what is a significant issue for our companies and disproportionately affects Minnesota's economy, and that is as part of the Affordable Care Act. As you all know, there's a 2.3% excise tax on the sale of medical devices. That originally was predicted to return to the federal government somewhere in the area of about $30 billion over a 10-year period of time, roughly $3 billion a year. Those estimates have since been downgraded slightly, but about 25% of this tax that helps to fund the Affordable Care Act actually gets taken out of Minnesota's economy. So because of our robust employment and production in this state, companies like Medtronic, St. Jude Medical, 3M, Boston Scientific, Minnesota pays a significant disproportionate level of this tax at the federal level. The 2.3% excise tax, of course, as you all know, is on first sale. So it is not on profits, and as the region of the world with the most early stage companies bringing that first product to market, and we've got small companies in Minnesota that effectively are paying a tax rate of near 70% in many cases as they work their way through both the administrative burdens as well as paying the medical device tax. So again, for the record, Life Science Alley brought an agenda to the legislatures this year. This was not listed as a top priority for us. Of course, we've been working with all of you to address the refundability of the R&D tax credit, moving that second tier up, as well as looking at how we might better capitalize early stage companies through the NOL market exchange bill that we've been pursuing for the last couple of years as well. But again, certainly want to commend and thank the chairman for raising this issue, putting this forward, and I think just from looking at the fiscal note, it gives you all a much better understanding of the massive economic impact that this has on our economy, specifically here in Minnesota. And with that, I'm happy to answer any questions, Mr. Chairman.
Okay, first of all, members, please disregard the revenue note, if you would, for today's discussion. With that being said, is there anyone in the audience that wishes to testify on behalf of this House File 268? Is there anyone that wishes to testify with concerns? Does the department wish to make comments? No? Okay. So with that, we can go to member questions, and then again, this would just be laid over. And members, I realize that the revenue note, which you have in your packets, I may have knocked a few of you off your chairs, but I kind of think that maybe kind of makes the point in a way as to how devastating the medical device tax is to companies in this state, that whether they make a profit or not, they're paying that 2.3%. So with that, members, question after this bill, we'll go to Bernardy. Any questions for members? Chair Carlson?
Sure. I find this kind of interesting when you look at what the House research said. For example, eyeglasses, hearing aids. Now, a few years ago, I went to the audiologist and they told me that I had a hearing deficit. And so through the audiologist, I purchased hearing aids. But I don't really feel that I purchased them directly. you know, it's not exactly a level playing field when you look at that device and then your tax. And I'm not sure that it's too different than if I were to go to a surgeon and the surgeon would tell me that I need a particular medical device, and they purchase that and insert it, you know, using a Medtronic, for an example, heart pacemaker or something. Same experience I had purchasing hearing aids, you know, dealing with a professional who gave me some advice on which ones to purchase, but I never directly dealt with the hearing aid company, like I would if I went into Walgreens and purchased bandages. It just does seem to be an unfair tax when they kind of filter out, my point is, certain products and say they're going to be taxed, and other products that perform a medical service that in theory are purchased directly, but apparently really aren't. I don't know if you want to comment.
Mr. Mandel?
I think I'm trying to reinforce what you're trying to do. But I do have my eye on the fiscal note as well, but.
I don't.
Well, you said you wouldn't, Mr. Chairman.
Yeah.
But I don't think we can help oppose that. Especially somebody had a press conference yesterday that, I don't know, 200+ million would be available if they prevail.
I missed that press
And
conference.
I know you did. You stayed here instead.
We had important work to do.
I was happy to see that, Mr. Chairman.
Mr. Mandel?
For other things.
Mr. Chair, just a quick comment. Yes, as part of the medical device tax, obviously, the ACA classifies those devices that will be taxed and those that aren't, and they opt out on, many consumer goods. But to your point, we have large companies like Starkey, who of course we don't want to get caught in paying the tax, but that certainly are innovating. It was intended, obviously, to opt out those things that people can buy over the counter. But your comments about an unfair tax, I think, is critically important. And one of the things I would point out to the committee, and again, this is the conversation that we have continually with our federal legislators, is this is an excise tax. And, throughout the history of the United States, excise taxes have been imposed on products to curtail their use, things like alcohol, tobacco, and firearms. And, anecdotally, as I go around and just, meet with Minnesota citizens that are working in device companies, interestingly, one of the questions that I get kind of, from the mid-level and the people that are making products on a regular basis is, why does the federal government think we're bad? We're trying to improve people's lives. So I think the unjust, the unfair piece of this certainly is one that, we believe that this industry has, for some reason, been unfairly targeted. It's certainly one of the few industries left in the United States with a positive export balance. And again, here in Minnesota, it's one of the key drivers of our economy.
And Chair Carlson,
I
you,
wasn't arguing to bring Starkey hearing aid company into it. I was arguing
Yep,
to
absolutely.
exclude you like they are excluded.
okay, thank you, Chair Carlson. Having a quorum, we'll call the House Tax Committee to order. Representative Simonson moves the minutes of, you have to be here, I suppose, to move the minutes. Chair Dabney moves the minutes of March 10th, 2015. Any additions or corrections? All in favor say aye. Aye. Opposed? Motion prevails. Oh, the committee won't shut down without Simonson here. Okay, so now I will officially move House File 268, and we'll finish up the discussion, and we'll get to the Bernardy bill. Representative Loeffler.
Well, thank you, Mr. Chair and Chair Witness, but my understanding is that these taxes have actually been passed on already and absorbed into the market. They've been picked up by insurance companies and others in the cost of business. And so I'm not sure what the economic impact is of this on Minnesota, other than, because I assume that the prices of the devices will not go down in terms of how they're charged to the patients who pay for them. And so it really, I'm a little confused by the discussion of it so benefiting the businesses when it looks to me like it's just raised the cost of a medical device. It's already been absorbed into insurance pricing, the cost of business in hospitals, that sort of thing. And so I'm a little confused as to what the real impact of this will be unless there's a corresponding forcing of this through the system, which I don't think this in any way guarantees. Is that correct?
Mr. Mandel, hold that thought, because we need to get this bill in the shape that the author wishes. So I'll move the H0268A1 amendment to get the bill in the shape that we should be discussing it from. Any discussion? Hearing all in favor, say aye. Aye. Opposed? Motion prevails. Okay, to the Loeffler question, sir.
Mr. Chair, Representative Loeffler, I really appreciate you raising this issue because I think it's important for this committee and the legislature to understand what's really happening in this marketplace. So, of course, being able to pass along regulatory burdens or taxes to the ultimate customer is the way of free market American business. Certainly, that's what companies attempt to do. In this case, the ACA is about constraining costs. It's about hospital administrators trying to take costs out of their system. So both insurance companies and the federal government today aren't allowing for price increases. In fact, they're pushing price increases down. And if you look over the last 20 years, the cost of medical devices relative to any other service sector within health care, whether it's pharmaceuticals, physician services, nursing care services, the rate of increase in price in medical devices has been far lower than any of those other sectors over the last 20 years. So one of the issues here is that for the most part, companies are not able to pass this along to administrators and consumers. In fact, there have been several studies, and we're happy to make those available to the committee from different entities that show that certainly a minority of companies have actually been able to pass that along. And that in fact, many companies have cut R&D spending, they have had some job losses, not made new hires. So while there is certainly some opportunity in some places to pass on a little bit of this cost, by and large, that isn't happening and has not been the case.
Representative Loeffler.
Well, Mr. Chair, it's the bill, as I read it, though, still doesn't provide that it will actually get passed on into the things that the industry says it will be passed on either. And I think, in good tax policy, we ought to really think about, what the trade-offs are. I mean, I have seen some analysis, and it varies by device to device, but some evidence that, quite honestly, most companies make their money off of their newest devices, even though they're minimally or marginally more effective than the previous device. And so there is pushback within the healthcare industry to say, we're comfortable with Model B, even though C's got a few little extra widgets. And so it has been, I think, to the consumer's interest that we have a much more information-based marketplace in healthcare, and it does, tend to constrain things. And I think that there is incredible market pressure on these industries and to be creative and innovative, and we've been really blessed in Minnesota with companies that have done that. At the same time, I think their loyalty to our country and our state has also been called into question, and I think that's something we're going to have to weigh as this bill goes along. But I really would like to hear, or get more information about how this really will benefit the consumers of healthcare directly, because we're asked to provide some direct tax relief.
Thank you, Representative Loeffler. Maybe Mr. Mandel could follow up and have a visit with Representative Loeffler. Other questions? If not, I will move that House File 268 as amended be laid over for possible inclusion in the omnibus tax bill. Item next, Representative Bernardy, House File 1301. I think she's right out here. Is there an amendment? Nope.
No amendments?
I bet I got the biggest fiscal note of the day. Oh, Members, if you look at the fiscal note, you'll see that, or the revenue estimate, you'll see that this one's just a rounding error compared to the last one. So While we're waiting for Representative Bernardy, I would just like to announce that tomorrow we're hearing House File 496, an ordinance bill, House File 122 from the gentleman from Lyon, House File 1363, House File from Franzen, House File 1367 Earhart, and House File 594 Anderson M. I wish it was Anderson S, but sometimes you just have to live with disappointment. With that being said, welcome to the committee. Chair Linchesky moves House File 1301. And Representative Bernard, just so you know, we're holding these tax bills within the tax committee for possible inclusion. So if you could, Chair Linchesky has moved your bill. I see that there are no amendments, so if you could please describe your bill and then introduce your testifiers. First, but before we get going, is there anyone else who wishes to testify on behalf of this bill? Okay.
Tracy Fishman from Prepare and Prosper.
Okay, Nan, you want to testify too? You're welcome to if you'd like. Anyone that wishes to testify with concerns on the bill? And I believe we do have the department to testify as a resource? No. In support thereof. Awesome. Okay, to your bill.
Okay, thank you, Chair Davids. I appreciate the opportunity to testify before the committee and members. I'm happy to be able to do this today. This is the child care tax credit that gets, and I have tax research here who can help me out here, but it is to help get more in conformity with the federal tax care credit. The difference with this one is that it's actually a refundable credit, and the federal one is not a refundable credit. And right now, the federal child care tax credit, it goes up to whatever anybody makes, they get the credit. It doesn't matter how much a person makes. In Minnesota right now, ours goes up to $39,000. And then this bill makes it go up to $100,000. We're trying to hit the middle class, and as well, and then after that, it phases out at $124,000. So with me today, I have somebody who, in her life, this would actually help her. You know, right now, people have the opportunity to take if they have an employer that has a flex account, they can do up to the $5,000 for that flex account. But if some people can't even do that, even if they have that, for their employer offers that. Our testifier today will talk about the need for her, because right now in Minnesota, she doesn't qualify for this opportunity. And I know, because she actually is a personal friend of mine and has been my constituent, but with redistricting, she currently is not my constituent. But she definitely would not think that, well, I don't know, she'll speak for herself, but she's got a hard life, being a single mom and having 2 kids, and it's not easy to make ends eat on her salary, and right now she doesn't even qualify. So with that, I'll have Christine Gotch testify on behalf of this bill.
Please state your name and who you represent for the record, please.
Christine Gotch. Thank you for having me, members and Chair David. I am here and I have 2 children. I have an 11-year-old son and a 3-year-old daughter. I'm currently a full-time worker. I'm an administrative assistant who I've been working for 8 years. I do part-time work over the holidays. I work at the Mall of America doing various sales positions. Right now, my income is so that I make more than $39,000, but I don't make a lot more than that. So with my 2 jobs, it puts me in a position that I don't qualify for the current child care tax credit. And right now, my daughter only goes to daycare part-time, 3 days a week, and I easily hit the, whatever the limit is. Oh, well, easily the 3,000, I thought it. Because with at my position, at my job, we actually do have a flex account available to us. But for somebody in my position who doesn't have a lot of extra money, with our flex, you know, it comes out tax-free to begin with, but you have to pay for the daycare expenses up front. So I have to wait for the reimbursement, and for somebody who doesn't have a lot of money, like as myself, I can't afford to wait for that to come out twice, because it would come out tax-free, and then I'd pay for it, the expenses. So for daycare for my daughter, it'd be really helpful if I had a refundable tax credit coming to me from the state. And then also for my son, who is 11, so this summer, he's probably going to be staying at home because there's not a daycare per se, and he wouldn't want to go to daycare anyways. But they do have day camps and youth enrichment programs that I would really like, and I know that lots of those would qualify as day camps for him that I could be able to afford if I had a nice refund coming from me from the state.
Okay, thank you. I think we'll get all the supportive testimony first, other than the department, then we'll go to questions. Could you please join us? And then if you could stay here, Ms. Gosh, in case someone has a question for you.
Absolutely.
Please state your name and who you represent for the record.
Good morning. I'm Tracy Fishman. I'm the Executive Director for Prepare and Prosper, formerly known as Accountability Minnesota. I've asked that my testimony be distributed, and I want to apologize. I know it's not afternoon, so it is morning. I will officially start. Good morning, Mr. Chair.
It's afternoon somewhere.
Yeah, that's exactly what Nan just said. So good morning, Mr. Chair and members of the committee. As I said, my name is Tracy Fishman. I'm with Prepare and Prosper. I really appreciate the opportunity to testify today in support of House File 1301, which would expand the Minnesota Child and Dependent Care Tax Credit to thousands of additional Minnesotans who struggle to pay for child and/or dependent care. Thank you to Representative Bernardy for your efforts to support more low and moderate income families. And we were also pleased to submit written testimony last week in support of Representative Loon's bill, House File 1064. Both of these bills meet an essential gap, supporting families so they can both work and ensure that their children are well cared for. By way of brief background, Prepare and Prosper is a multifaceted organization focused on poverty alleviation and financial capability for low and moderate income households in Minnesota. We leverage the expertise of about 550 trained volunteers, and in 2014, we served over 13,400 taxpayers and helped return nearly $27 million in tax refunds in the Twin Cities. We also offer an array of financial services and products to help our customers save and maximize the financial impact of their tax refunds, a time we refer to as an opportune money moment. And finally, we train many other organizations throughout the state to provide similar services in their communities. Representative Bernardy's proposal would expand eligibility for the important child and dependent care credit, allowing more of the families we serve and throughout the state claim this refundable tax credit to help offset the costs associated with child and/or dependent care. According to one of our many customers, Tamia, she was recently paying over half of her income to cover the costs of child care, leaving her family little money to pay their other household bills and expenses. The expansion of the child and dependent care tax credit would provide more relief to her family. What's more, many hardworking families who could claim this important credit are eligible for other refundable state and federal tax credits that together can make a big difference in their lives. Programs like ours provide these families with high-quality free service and ensure that they can keep 100% of their refunds. We know from research and our own experience that taxpayers use their refunds to meet basic needs like paying bills and put food on their table and hopefully set aside some money to save for a rainy day and a brighter future. Moreover, these tax credits benefit local communities and our economy. Chairman Davids and members of the committee, thank you again for this opportunity to testify about the importance of this tax credit. I hope you will support this legislation that will expand coverage for many more families in need of assistance. Thank you.
Thank you, Ms. Fishman. Just maybe for Ms. Manzi a second here. We had the Loon bill, we have the Bernardy bill, we have the bill that I'm carrying for the governor. Is this bill kind of like, how do the three differ, if you will?
Mr. Chair, members of the committee, this bill is the same as the first article of the bill that you're carrying for the governor. So this is the governor's dependent care credit proposal. Representative Loon's bill is a modified version of the dependent care credit proposal that the governor included in his budget last year. When the tax bills went to the conference committee, the chairs asked the governor to submit a modified version of his original proposal, which would, like Representative Bernardy's bill and the governor's bill this year, have extended eligibility up to $100,000. The governor complied with that request, and Commissioner Franz came and presented a proposal to you to extend the dependent care credit to $70,000. And that language, updated by 1 year, is what is in Representative Loon's bill.
Okay, and so in the bill we have before us, we're looking at incomes up to 100,000, but then I saw 124,000 somewhere. What's the distinction there?
Mr. Chair, the $100,000 is the income level at which the credit would begin to phase out. It would be fully phased out for people claiming the credit for one child at $112,000, and for people claiming the credit for 2 or more children at the $124,000.
Okay,
Similarly, the Representative Loon's bill, the phase-out would start at $70,000. It would run to $82,000 for people claiming the credit for one child, and to $94,000 for people claiming the credit for 2 or more children.
okay, and I know we're not talking money here, especially after that bill I just had. What's the difference in cost between the two? Not that we're doing cost right now, but we've got, well, I can, okay.
Mr. Chair, this is going to be, I think, a little off. The revenue estimate, and Ms. Templin can probably speak to this also, but the revenue estimate for House File 1301, Representative Bernardy's bill, shows an impact of $50.3 million in fiscal year 16. For Representative Loon's bill, let's see, I'm not finding this. The revenue estimate shows $35.3 million in fiscal year 16. The revenue estimate for Representative Loon's bill is dated March 3rd, 2015. I'm not sure if that was prepared using the assumptions of the November forecast or of the February forecast. The estimate for Representative Bernardy's bill was prepared using the February forecast. The estimate that you have for your bill, the governor's bill, was prepared using the assumptions of the November forecast. So the amount, if you looked at that estimate, the amount that it shows will be slightly lower than what is shown for Representative Bernardy's bill, even though the language in the two bills is the same.
Okay, thank you very much for that explanation. Questions for the author or our two testifiers? I have Anderson S., Chair Anderson S.
Thank you, Mr. Chair. Representative Bernardy, I'm going up to the $124,000 level. Can you talk to me about the importance of going to that range?
Right,
Representative
exactly.
Bernardy?
Well, it phases out, it starts to phase out after 100,000. It does go to 124,000, but it's less of a credit. I talk with people in my district all the time, and I want to target middle-class income families with this bill and to expand it for their opportunity as well. And so picked a number, figuring people who make 100,000 and have 2 kids could use this kind of direct tax relief. So that's why we picked 100,000.
Great, thank you.
Chair Anderson?
And Mr. Chair, just a comment on the child care. I understand the cost that you're facing. I have to pay it myself. So thank you for coming today to testify.
For having me.
The gentleman from Lyon.
Thank you. Just, Mike, more of a comment to the testifier. Thank you for coming. And you just mentioned about summer camps. And Swazinski Farms does host a number of summer camps. We, right away after planting, we have rock camp. And then later on in the summer, we have hay camp that we're accepting applications for. And we encourage any young people that would like to apply to come on out. So,
Mr. Chair,
To that point, Representative Dabb, usually don't do that, but.
I've got a 12-year-old who could use a good, strong rural Minnesota experience. Representative Swazinski, when can I drop him off?
Gentleman from Lyon?
Mr. Chair, assuming this bill goes forward anytime, as long as they don't eat much.
Oh.
Well, it cuts me out. Okay, Chair Knoblach.
Mr. Chair, Representative Bernardy, I guess following up on Representative Anderson's comments, do you have any information at all on, I mean, if you look at, say, taxable income of 100,000 or 80,000, what percentage of the households in Minnesota or what percentage of the households with children are above or below that? I mean, it seems to me like the total median house or the average median household income in the state for all households, I think, is in the $55,000, $60,000 range. And And I know that that includes people that are retired and such, that are on Social Security, and that would drag down that number. But it just does strike me that, you know, we have a lot of bills floating around with different numbers, and when I see us proposing to, you know, subsidize and give credits to families that are making six-figure incomes, I wonder about the people who are the average families that are making half that are thus subsidizing those families.
Representative Bernardy?
Thank you, Mr. Chair. Well, this is the reason why I like the Minnesota program much better than the federal program, because ours really, this bill, I'm putting more money in so people at the lower quadrants will get an increase, and then people will expand the opportunity for more middle-class Minnesotans to be able to get an advantage of this. So, for example, the federal program, the way if you disperse who gets the benefit from it, 35% of people over 100,000 get that benefit from their program. And when you go down to people making, let's say, 30 to 40,000, around, they get 10% of the benefit at the program. Minnesota is different than that because we have, it benefits people in the lower income. We're adding more money into it for the people in the lower income and then expanding the program. I don't know if that answers your question, but.
Chair Knoblach?
Well, Mr. Chair, Representative Bernardy, but still, as I understand your bill, I mean, everyone gets the full credit for income up to $100,000, correct?
No, actually, that's not accurate. After 39,000, it starts to phase out to get the full credit, and at 43,000 and above that, then people will get 20% of the, and we can have House Research help us on this too, but then it goes down to 20% after 43,000. So it is a progressive type tax credit.
So, Mr. Chair, so it's
Chair
at, maybe we can, I don't know, otherwise House Research can answer that too. So you're saying it's at 20% from 43,000 up to 100,000, and then
Right.
it phases down more?
Yes.
Maybe we have Ms. Manzi just clear that up for us. Ms. Manzi?
Mr. Chair, Representative Knoblach, if you look at the table on the revenue estimate at the bottom, the credit, the federal credit is determined as a percentage of qualifying expenses. And the table at the bottom shows the rate of the credit by income range, and then it shows the maximum credit that would be allowed by income range. And you can see that the credit rate starts to decrease once your income reaches 15,000, and then it reaches 20% once your income reaches the 43,000. So people making under 15,000 would be eligible for the maximum credit of $1,050 for the care of one child if they had $3,000 of expenses, and $2,100 for two children if they had up to the maximum qualifying expenses of $6,000. And then that would decrease as income increased until you got to 43,000, when, assuming you still had those maximum qualifying expenses, the most you could get in a credit would be $600 for one child or $1,200 for two or more children. And this is the structure of the federal credit under current law, and under both Representative Bernardy's and Representative Loon's bill, the state credit would match the federal credit. So the $600 or $1,200 would then be available up to the $100,000 phase-out floor. And then it would decrease by 5% of income over the $100,000 and be not available at those higher income levels.
Okay, well,
Chair
Mr.
Knoblach?
Chair, Representative Bernardy, or maybe just a comment. I guess I see that, yeah, it is structured so that it has a somewhat higher credit for lower income people. And I guess I do think that, you know, it probably should have the incomes adjusted from where it is now. But I guess I just, you know, as sort of an editorial comment, I guess when we start giving credits like this to people that are over $100,000 that are being subsidized by people that, you know, make less than half that, you know, it does give me some pause. And, you know, more generally, I wonder about it from a sort of a bigger picture in the whole legislature. Should we say that, well, we're just not going to be giving credits for people that make over a certain number, you know, and we don't have any sort of a fixed policy on that, and I don't know if we can get one, but it is, at least in my district, people who are making six-figure incomes is a good income in St. Cloud. And so that's just something I wonder about.
Thank you, Chair Knoblach. Chair Drazkowski.
Thank you, Mr. Chair. You know, I've heard people talking about middle class and middle income. What is middle class? Representative Bernardy, do you have a definition for that?
Representative Bernardy?
I don't have, I know there's a lot of different definitions. Sometimes I've heard it's 30 to 50,000. I know in my district, people that make 50 to 100,000 think they're in middle class. Some people actually, sometimes when they make it into the hundreds of, not hundreds of thousands, but 150,000, they think they're middle class. It's kind of, there's a perception of what people feel like they're in, and then there's definitions, and I don't know the exact definitions, if there's certain ones that people use as what's considered middle class.
Ms. Manzi, is there something in IRS code or anything that says this is considered middle class, or is that just kind of a term we use?
Mr. Chair, I don't believe there's a definition either in the Internal Revenue Code or in Minnesota's tax statutes of what is middle class. And my experience during my time at the legislature is that it tends to be in the eye of the beholder.
Mr.
Chair
Chair,
Drazkowski.
it's kind of like beautiful. I mean, in the eye of the beholder. Mr. Chair, are you middle class?
I was saying more beautiful. but that's in the eye of the beholder. I haven't looked in the mirror lately. Chair Drazkowski, you have the floor, sir.
Thank you, Mr. Chair. You know, a question, I guess, for maybe Ms. Manzi. Does somebody who files for this credit currently have to actually have earned any income in order to get it? Can they get the refundable credit and not have paid any taxes?
Ms. Manzi.
Mr. Chair, Representative Drazkowski, both the federal and the state credit, there are two exceptions to the state credit, and I'll talk about those later, but the basic federal and state credit are limited to people who have work-related expenses. So they either have to be working and have to pay for childcare so they can work, or they have to be looking for work in order to claim the dependent care credit. The two exceptions to that at the state level are a special credit for people who care for their own child under the age of 1 in their own home, and they have deemed expenses for purposes of claiming the state credit equal to the maximum allowable expenses and up to the maximum state credit. The other exception are people who operate family daycare homes and care for one of their own children in their home, and there's a formula as to what their deemed expenses are. Now that group of people arguably are working because they're operating the family daycare home. So it would just be the people with a child under age 1 who someone in that household may be working. That credit, that special exception, is limited to married couples, so they have to be two-parent families. If one of them chooses to stay home with the child, then they have the deemed expenses for the first year.
Chair Drazkowski.
Thank you, Mr. Chair. So, Ms. Manzi, so that the working threshold, is there a description for what that is? Do they have to have earned a certain threshold of money while working, or do they have to have worked a certain number of days a year, or?
Ms. Manzi.
Mr. Chair, Representative Drazkowski, the expenses that you pay for the child care have to exceed what your earnings are in order for you to, your earnings have to exceed the expenses, so in order for you to claim the dependent care credit, is my understanding.
So,
Chair Drazkowski.
thank you, Mr. Chair. So, Ms. Manzi, looking at the 0 to 15,000, so if you have 2 kids and you earn $2,101, you could get the full $2,100 in credit. Is that
Ms.
right?
Manzi.
Mr. Chair, Representative Drazkowski, if you have 2 kids, you would have to be paying $6,000 in expenses in order to be eligible for the $2,100, because the credit is set at a percentage of your expenses. It's at 35% for the people below 15,000. So you would have to be paying $6,000 in order to claim the maximum $2,100.
Chair Drazkowski.
Thank you, Mr. Chair, Ms. Manzi.
Representative Loeffler.
Well, thank you, Mr. Chair. And I think it's important to really kind of weigh the families that we're trying to help and what's the best way to help them. And while the revenue note talks about the maximum credit, my understanding is that the average would be about half of that. And so we're really looking at a benefit of $8 to $10 a week per family, which is not as much as one might think in terms of help. And as our witness noted, you have to pay for your childcare all through the year, and then you wait for the refund. It'll be a refundable credit. And so it really doesn't help most households with their day-to-day, month-to-month expenses with childcare. And the lowest income families will not be able to afford the high-quality, expensive childcare, so they'll probably get even less of a benefit. I've seen some tables that would show that they'd get, maybe $200, $300 a year through this tax credit. But we do have a basic sliding fee childcare program that is housed in Health and Human Services. It has over, I can't remember, I think it's over 7,000 families on the waiting list. They wait 2.5 years in my county to get off the waiting list, and it's sliding fee, so it's proportional to your income. It goes up to a moderate income, but what that does is it actually helps you month to month pick up that cost so you can afford to get into something more quality. Where I think as we help more moderate, middle-income families, higher-income families, I think we'll be contributing more to those enrichment activities that I think are valuable to kids and families as well. But I think it's a trade-off in terms of, I suspect the lower-income households are just not going to be able to step up and wait for the refund, where I think more of the middle-class families, they can, and then they'll use that refund in ways that benefit their kids in a different way. So I think we're going to have, throughout this session, a real challenge, because we just have so many kids who we want to have in good quality care, and credits work for some families, and sliding fee is a much better approach for others.
Thank you, Representative Loeffler. The gentleman from Lyon.
I'm good, thank you.
Chair Anderson S.
Mr. Chair, just quickly, Ms. Manzi, so what this would do by going up to the 124,000 level, if you're single and you're making 122, that puts you in the third tax bracket, right? Which used to be our highest tax bracket, correct?
Ms. Manzi.
If you're a
Mr.
single.
Chair, Representative Anderson, whether or not a person was at the 7.85% rate would depend on what their deductions were. So it would depend on if they had a home mortgage, how much their property taxes were, how much they made in charitable contributions.
Mm-hmm.
Generally, I think that someone making that much as a head of household filer would be at the 7.85% rate, but not, no, they wouldn't. They'd be at the 7.05% rate. They would be, yeah, they'd be at the 7.05% rate.
Chair Anderson S.
Mr. Chair, because I thought the 7.85 started at 82,000.
Madam, Mr. Chair, Representative Anderson, it's around, I'm sorry, but I'm blanking out on what it is for the head of household filers. The 7.85% rate for a married couple starts at around $135,000, but that's $135,000 of taxable income. So that's after either the standard deduction or itemized deductions, after personal and dependent exemptions. So and for a head of household filers, it's lower than that 134,000, but I think that someone at and Stephen has looked it up, and it's 124,000 of taxable income is where a single parent or head of household filer would go from being at the 7.05% rate to being at the 7.85% rate. Now, someone with $122,000 of earnings would certainly have taxable income of less than that, something, $100,000 or, let's see, 76. Yeah, around $100,000, depending again on if they itemized, if they owned a home, and so forth.
Okay, great, thank you.
Chair Anderson. Okay, any other, before we bring the department up, anyone else questions for these folks? Okay, thank you very much, Ms. Fishman and Ms. Gotch. Thank you very much. We'll bring up the department.
Mr. Chair, as he comes up, Ms. Gotch wanted to comment one more thing about, she was sending me a little note here. Could she just say one more thing?
Oh, certainly,
Can I
absolutely.
say one
Ms.
thing?
Gotch.
Sorry. I just wanted to add that, you know, I am a single mom with 2 children, and I have always had a decent job. You know, I'm fairly young, but I've had a reasonable job since I was 16. But even with that, when my son was little and I was just graduating high school, I still couldn't qualify for the child care assistance. So I would have been put on that waiting list, and I would have waited, you know, 2 years as well. And so when my son was in daycare, just until 2 years ago, I was paying for both of my children in daycare in a licensed center. And I would write out every 2 weeks, I would write half my paycheck to the daycare center. So I don't know how, if I have a fiance who luckily has a home, so if I had to pay for a home, I would be homeless. So I just wanted to add that. Thanks.
Thank you. Thank you very much. Okay, Mr. Cummings, please state your name and who you represent for the record, please.
For the record, my name is Paul Cummings, and I'm the Tax Policy Manager at the Minnesota Department of Revenue. Thank you for the opportunity to testify today.
Welcome, Mr. Cummings.
Mr. Chair, before this hearing, I did receive a text from Commissioner Bowerly, and she said to make sure to thank Chair Davids for going down to Rochester. It might have been to the side for you, but
Oh,
to talk
go to
about
Rochester, I go way up north.
way up north to talk about the child independent care credit. So she wanted to thank you. Thank you to Representative Bernardy for bringing this bill forward. This bill mirrors the governor's bill. And then thank you to you, Mr. Chair, for hearing the bill today. The Department of Revenue supports Representative Bernardy's bill.
Did you get that down?
Ooh, support.
Yes. There is a bill coming up. Representative Garofalo has a bill that we'll be supporting too, but Representative Garofalo is not here to defend himself, so.
Doesn't it beg the question, why didn't you support any of my bills?
Well, Mr. Chair, there's a long
Conformity,
session.
you did.
Yes, absolutely.
Okay.
And we do support, you have a bill in that, that looks like this too, Mr. Chair, and we do support that bill.
I'm carrying the governor's bill, and you probably support that too.
We do, Mr. Chair. So, thank you for putting that very good bill in. Mr. Chair, Representative Bernardy's bill recognizes the strain of working parents across Minnesota. On average, childcare in Minnesota costs $901 per month, or over $10,000 per year for one child in a child care center. Those high costs often force families to make difficult choices between the high payments of quality care or leaving the workforce altogether. Earlier this year, you know, Commissioner Bowerly has been talking about this credit, and there's 2 stories that she came upon. And one was, it was a 2-parent household, both that are working, and they had 2 children, and they were trying to deal with the costs of, you know, a new house. They were trying to deal with the costs of student loan payments and child care payments. This is something that would not previously have been afforded to them, and something that they would have been eligible for now. There's another story of an individual in which a person that was trying to make payments for their child care, they were not able to get on the sliding fee, and a person that dropped out of the workforce. She stated that these tools are tools that she would be able to use in order to allow her to get back into the workforce. Because of the high cost of childcare, many parents are forced to leave the workforce because it makes more financial sense to care for their children at home than to keep their jobs, which is the story that Commissioner Bowerly saw. To make childcare more affordable for working families, Governor Dayton has proposed expanding the child independent care credit to help families with more economic security and to provide more flexibility for families with small children and aging parents and family members with disabilities. So we look forward to continuing to think about this. We look forward to the partnership with this committee on addressing these important issues. I know, Mr. Chair, the issue of $100,000 was brought up, and the choice was, should there be, for the governor, it was really about, should there be complete conformity? Should there be any income threshold? And there was an income threshold that was decided to put on at $100,000. But I know that Representative Loon has a bill in, and we look forward to working with you, Mr. Chair, and thinking through those issues as this bill continues to move forward.
Thank you, Mr. Cummings. Any questions for the department from members? Anyone else that wishes to testify for or with concerns about this bill? Okay, so Representative Lancheski, Representative Slocum moves House File 1301. Can she move it if she's not here?
He's here. He's right.
She's right there.
No, Lancheski, just logistically here. Can someone remove a bill if they're not here? Okay, I have no rules. Representative Lancheski moves House File 1301, renews her motion. We didn't amend that, did we? No. Okay. Be later for possible inclusion in the omnibus tax bill. Thank you very much, Representative Bernardy, and to your witnesses and to the department.
Thank you, members and Mr. Chair.
Item next and item last, and just a thought, members, just because we have the room till 12 o'clock doesn't mean we have to be here at 12 o'clock. And I say that only because this is one that we spent a lot of time on yesterday, but I am not going to be cutting off debate. And I'll go back to my list. Chair Knoblach moves House File 798. Now, had we amended that yesterday?
We'd already moved.
No, we had, we did not amend it yesterday.
Okay, no amendments? Okay.
You moved it up.
Okay, if it's okay with you, Chair Knoblach, I'm going to get right into questions of members, if that's okay?
Sure.
Okay, Representative Simonson.
Thank you, Mr. Chair, and to the author. My question was really about the last section of your bill on the last page, on page 7, which gets into this inflation adjustment piece. And I'm just wondering, I don't think I heard a really good explanation of what that would look like or what you were trying to do there. And I'm just wondering, Mr. Chair, if, and to the author, if you'd be willing to just kind of walk through that and give us an idea what that looks like going forward.
Chair Knoblach.
Sure, Mr. Chair, Representative Simonson. Yeah, well, I guess it comes from the fact that really, none of this has been adjusted since the mid to late 90s, and I'm not sure we're going to adjust when we're going to adjust it again. So what it would do, it would adjust the phase-out income qualifiers. So right now, you start losing the education tax credit qualification at $33,500 of household income. This bill moves it up to $47,500, but over time, that would move up as inflation presumably existed, so that we wouldn't be caught in a situation again like we are right now. And similarly, I think that the deduction number and credit number, which were adjusted for inflation, would also be adjusted, yes.
Representative Simonson.
Thank you, Mr. Chair.
Okay, members, I have Dabney Earhart, Chair Drazkowski, Representative McDonald, Chair Erickson, Chair Dabney. We can come back to him if he comes back. Chair Earhart, was he excused?
Yeah.
Okay. Chair Drazkowski.
Pass, Mr. Chair.
Representative McDonald.
Pass, Mr. Chair. I spoke yesterday.
Chair Erickson.
Pass.
Wow. Back to Chair Dabney. Any one, Representative Moline.
Thank you, Mr. Chair, and Representative Knoblach, the tax credit portion, do you know if private, and I'm sorry if I missed this yesterday, do private parochial schools have to abide by the Title IX protections?
Chair Knoblach.
Mr. Chair, Representative Moline, I guess I don't know if I know the answer to that.
Representative Moline.
Mr. Chair and Representative Knoblach, I just looked it up, and it sounds like only education institutions that take federal funding have to abide by Title IX. So if there are private parochial schools that don't take federal funding, they would be able to discriminate against students based on gender for educational purposes, extracurricular activities. And I'm just wondering if there's language in your bill that would make sure that we're not providing a tax credit for private schools that don't have to abide by Title IX and other protections.
Chair Knoblach.
Mr. Chair, Representative Moline, you're not providing a tax credit to private schools. You're providing a tax credit to parents who choose to send their children perhaps to private schools.
Representative Moline.
Mr. Chair, Representative Knoblach, yes, I understand that, but so under the scenario where parents would choose to send their kids to a parochial school that doesn't have to abide by Title IX, so girls can be discriminated against for educational opportunities, extracurricular opportunities, et cetera, is there any language in your bill to make sure that we are not giving tax credits to parents to send their kids to schools that don't provide equal educational opportunities for their students?
Ms. Manzi, could you respond to the main question?
Mr. Chair, Representative Moline, if you look on page 6 of the bill, this is where the language is in current law for the private school portion of the credit and deduction, because there are, like if you were in an well, anyway. But if you read this language, it says it has to be a school wherein a resident of this state may legally fulfill the state's compulsory attendance laws, which is not operated for profit, and which adheres to the provisions of the Civil Rights Act of 1964 and Chapter 363A. Chapter 363A is the Human Rights Chapter, and this is, I think, the first time I have looked at Chapter 363A. But in looking at it, the first section that has language in it relates to freedom from discrimination, and then there is a clause related, clause 5 of paragraph A is related to freedom from discrimination in education because of race, color, creed, religion, national origin, sex, marital status, disability, status with regard to public assistance, sexual orientation, and age. So without having looked at it more, without having talked with Mr. Michael or one of the other attorneys in our office about how this applies, it certainly seems to me that the intent of the current law language is to not have discrimination based on any of those things.
Representative Moline.
Mr. Chair and Representative Knoblach and Ms. Manzi, I appreciate that information. That's helpful. I'm sure that nobody would want to be providing any sort of credits to schools that maybe aren't following our laws against discrimination. I am a little bit familiar with the Minnesota Human Rights Act. I think the remedies are different under the Minnesota Human Rights Act than they maybe are under Title IX. So maybe if we're going to be, expanding the credit available to sending kids to private parochial schools, that we should make sure that the Title IX protections are in there as well. And maybe it's just something we need more information on and how it would operate under the current language. But I just wanted to bring it to the committee's attention.
Well, Mr. Chair, if I
Thank you very
could.
much, Representative Moline. Chair Knoblach.
Yeah, Mr. Chair, Representative Moline, I appreciate you bringing it up, and I'll look into that.
Okay. Representative Moline.
Thank you.
Chair Erickson.
Yes, thank you, Mr. Chair. And to that point, I believe if these schools are members of the Minnesota High School League, if they pay a dues to them, they follow the guidelines of the High School League, and I believe that would be one of those is Title IX. But we should check on that as well.
Thank you, Chair Erickson. Chair Drazkowski.
Thank you, Mr. Chair. So Representative Knoblach, as I understand it, currently this credit cannot go to parents who happen to send their kids to schools other than public schools. Doesn't that policy discriminate against families who happen to decide to send their kids to private or other schools?
Chair Knoblach.
Well, Mr. Chair, Representative Drazkowski, I certainly suppose a person could say that, but actually the credit as it exists right now is available for parents of children that go to both public and private schools. It's just that for parents who send their kids to private schools, they can get the credit for school supplies, they can get the credit for books, they can get the credit for after school tutoring, they can get it for various extracurricular activities and computer software. They just can't get it for the private school tuition itself. They can get the deduction for private school tuition, but they can't get the credit for private school tuition. So that's one change the bill makes.
Chair Draskowski.
Thank you, Mr. Chair. Thank you, Chair Knoblach. I mean, Mr. Chair, it appears to me that our public policy around this does discriminate against families who happen to pay public school tuition and to choose to send their kids to, or private school tuition and send their kids to private schools. So if there's any discrimination, members, that's going on here, we are discriminating against kids that go to private schools and in turn encouraging public schools by the public policy we have here now. That doesn't seem to be fair, members.
Representative Loeffler.
Well, thank you, Mr. Chair, and Representative Knoblach. I note that in Section 1, there's a striking related to the deduction. There's a striking of a lot of language at the bottom of page 1 and the start of page 2, which has been our tradition. I mean, it says that we do not provide this for schools that are operated for profit. The school has to adhere to the provisions of the Civil Rights Act of 1964 and Chapter 363A, which I don't know, but I assume is a non-discrimination chapter in law. It continues on page 2 to say that it can only be used for teaching subjects that are legally and commonly taught in public elementary and secondary schools. Lines 2.6 on say that the textbooks cannot include instructional books and materials used in the teaching of religious tenets, doctrines of worship, which the purpose of which is to instill such tenets, doctrines, or worship, or and then it has some other limitations. And I don't see that those are restored, but maybe there's a reference somewhere else. Could you help me understand if you're broadening what the deduction covers?
Chair Knoblach.
Mr. Chair and Representative Loeffler, actually, I'll have Ms. Mancy speak to that in a minute, but if you look on page 5, you'll see that language is repeated. And all we did in eliminating the language in front is there used to be two slightly different descriptions for the deduction and the credit, and it was confusing, and as long as we were doing this, I thought we should just simplify the statute and have it all refer to one list. And so Ms. Mancy prepared an amendment for me that did that we passed in education. And I guess if I could, Mr. Chair, I'd have Ms. Mancy speak to that.
Ms. Mancy.
Mr. Chair, Representative Knoblach, that's exactly what happened, Representative Knoblach. Once Representative Knoblach's bill extended the credit to non-public school tuition, then the expenses that were allowed under the deduction and the credit were the same. They were simply repeated in two parts of statute. And Representative Knoblach asked me to prepare an amendment that would just list the expenses in one of the two sections and have the other section point to the section that listed them. And if you look, let's see where it is. If you look on page 2, line 13, you'll see new language that references education-related expenses as defined in section 290.0674 subdivision 1. And that is the portion of the credit which lists all of these qualifying expenses. And they're,
Page 5.
that starts on page 5 and it runs on to page 6. And you'll see a little bit of new language at the end there on line 6.14 to 6.16. That really should be at the end right after 6.12, but I got that in the wrong place a little bit and we can move it later on. That new language is language that was included in the deduction statute, but not in the credit statute. So that was put back here into the credit statute so that we would be having the same restrictions on both that we have in current law and simply just list the expenses in one place. Now, when you make that sort of change, you're always a little nervous that you've drafted it correctly, and I was certainly heartened when I got the Department of Revenue estimate, which somewhere in here it says that expenses would be the same for the credit and the subtraction, so their attorneys have read the engrossment of this bill and concluded that it's the same as it, it just adds the tuition to the credit.
Representative Loeffler?
Well, thank you, Mr. Chair, and I'll just follow, I'll assume that these are parallel and that that's what, do we need to, if we don't adopt these changes in the credit, then go back to the old language in the deduction section?
Ms. Manzi?
Mr. Chair, Representative Loeffler, I think if you decided not to extend the credit to tuition, you could still have the deduction point to the credit section for everything else and then just add back in tuition under the deduction to get to where you are. I think there's probably some clarity benefit to just list them in one place so that if in the future there are any changes made to them, we don't have to be careful to do them in both places.
Thank you. It sounds like
Representative Loeffler?
a good reordering of the statutes. I'm just trying to understand how the pieces work together.
Any other questions? Anyone from the audience wish to testify on behalf of or with concerns on the bill? And did we say anything from the department? Okay. And nothing from the department on this bill. Okay, with that, members, Representative Knoblach renews his motion that House File 798 be later for possible inclusion in the omnibus tax bill. With that, we have a robust schedule for tomorrow. Members, thank you for your work. Good government all the time. We are adjourned.